Hi, and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping down into the world of Bitcoin. We're going to be taking a look at what's been going on with the price action and what I think is likely to happen next. Now, as I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, why not go ahead and check it out? Link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Let's jump right down into today's video, and we are going to be taking a look at a few different things, right? So obviously we've got the technical analysis. This here is Bitcoin paired up with USDT on the 1 hour Binance chart. You can see here that we were talking yesterday about the move upwards to 37,000 to 37,700. We wicked up slightly higher, so we actually hit the high of $37,972, right? You can see it right in there. And for all intents and purposes, I think we are there or thereabouts. I just want to check to see there whether or not we're going to get one last push on a bigger level. I'm just going to do that with this structure right here. Is it might be that we need to have a Z wave pattern, and I think we will have to, yeah. So I'm going to just take this one off because we've just gone a little bit over and above where it should have done. So we have a W, an X, a Y. We've come down here for the X. We probably have to go up into a Z. Okay, this is something that we've been talking about quite a bit. As you can kind of see, it's also the same in here. So again, we are actually going to be covering this as a W, X, Y, X and Z. Actually, I need to kind of move that around a little bit. I'm just going to clear out some of the noise just so that we don't have to have too many things kind of going on here. So as you can kind of see, we're not in that 5-wave pattern that led into this, by the way. It could be a diagonal of a contracting variety. That's also a possibility. We can't rule that one out, but I think the scale of that would be very unusual to be in here. Possible, of course, but I'm not too concerned about that at the moment. So for the most part, we are going to be looking for this last little push upwards. If it is, of course, going to be a contracting diagonal pattern, this Z wave will be very short. Okay, wave 1 or this W wave here will be the longest wave, which it is at the moment. I'm just going to go do some sense checks here. Actually saying that, I don't think it does constitute that. No, it's not. So it's not a contracting diagonal. So we're going to leave it with the Z wave pattern, of which would be landing us between a couple of target ranges. I'm going to go ahead and repurpose my yellow box here. We're going to put the Z wave high there, and the Z wave low would be here. Okay, so it's quite a broad target range, and it's broad because the Z wave can be so many different patterns, right? But essentially, looking at this, we would target out between 37,428 up to a high of 39,339. So as I kind of had on the thumbnail yesterday, $40,000 as a nice round number. It kind of gets you in and around that number there. So interesting to kind of see that. And we'll probably take a look at the weekly chart because there's some interesting resistances to also be considering in here as well. So we're right up into that upper area now. So interestingly enough, that's kind of where the hourly chart kind of goes. Now, yesterday we saw this push upwards, right? And we saw an immediate rejection to the downside, right? A massive liquidation event occurred. 6.25% moved to the downside. As I said many times before on this channel, the market at the moment is essentially just hunting for liquidity, essentially basically trying to find where the money is, and they're trying to extract it from the market, right? And so we see a lot of this moves up and then rapid moves down. Basically, get some FOMO activity going in. People think that you're in a bullish market, and then just have that rug pulled from within them or from underneath them, right? And so it's not unusual that we keep seeing this. It keeps happening time and time again. And so what's interesting about that is if I bring up the website here, so this is our membership website, membership.cheekycrypto.io. In here, if for members, there's a data portal, right? And inside the data portal, which I'll load up on a bigger screen here, we have on-chain metrics for Bitcoin, as well as a whole host of other chains as well, right? Cardano, Chainlink, Dogecoin, Ethereum, Litecoin, XRP, and I continuously add more to this as time progresses. Now, we have the overview. I'm not too interested in the overview of the analysis here, but I do want to take a look at the liquidations over the last 24 hours, right? We can see it's $118 million of liquidations on Bitcoin in the last 24 hours, of which only 33.51% were long positions positions and 66.49% were short positions. And that's considering that big move to the downside, right, was only really targeting out the long positions. Before we had that move upwards was all about liquidating the short positions. You were able to liquidate both sides of the argument during a very short period of time. I think it was like within, 6 to 7 hours. We'll take a look at the chart in a second where we saw move up, liquidate any of those shorts, move down, liquidate the longs, right? The exchange with the most amount of liquidations was OKX at $52.6 million. Again, not unusual considering the migration to OKX is one of the bigger exchanges now. Binance comes in at second spot at basically half of that at 25 million. So interestingly enough, as you can kind of see from the graph here, a majority of liquidations were OKX. In fact, 44.38% of all liquidations were OKX liquidations and 21.54% were Binance liquidations. So very interesting to kind of get a good view on what's kind of going on there. We could, of course, take a look at, what's going on with the wallets and stuff like that. But again, this data is available for all members over on the website. Links are in the description below if you're interested. Let's go back to TradingView, right? So we know that this was a big liquidation, $114 million, right? We had this surge upwards liquidating the shorts, and then we had the move down liquidating the longs, right? So it's interesting to kind of take a look at, see what's going on there. Now, from a daily standpoint, we can see this progression upwards here. Again, it still has this overlapping movements, which doesn't give me a lot of confidence in the market here. We could be looking at a 5-wave structure. We'll go ahead and take a look. I don't think we're there yet. This wick is telling us there's a lot of selling pressure on that higher range. So if we were to look at this as a kind of 5-wave pattern, where would it need to go? Well, we would need to hit as high as 38,523 to be able to kind of trigger that as a 5-wave movement. The only other way of doing this is to have it as a contracting or expanding diagonal. And I don't think we are there for an expanding diagonal. We might be, but I don't think we are. It's possible, mind. And for that, we'd still have to come down and then have a really big push within that last final 5th wave movement. So from our daily standpoint here, as you can kind of see, you take a look at this. We have a 3-wave move here. We have a 3-wave correction down. Let me show you, right? So we have 3 waves here going up. We then have an additional 3 waves coming down. All of that is corrective. And then we end up with this, what looks to be impulsive movement. I think it is right inside here. Yeah. So we hit that 3rd wave high, right? So we have a wave 1, 2, 3, down for 4, and up into 5, right? So we're trying to track a 5th wave movement. Now, this 5th wave at the moment has overextended what you would normally. So this would be an extension to that final 5-wave structure. And we are potentially just in the wave 3 or currently wave 4, meaning that we have to have that push up high. And it would, to me, have to be an expanding because we failed to hit 1.618. So we'd have to kind of have this as a wave 4 coming down here and then a bigger wave 5. Now with this, wave 3 would have to be the shortest, wave 1 would have to be the shortest wave and wave 5 would have to be the longest wave. Okay, so for this to play out, wave 5 would have to be a very, very big push to the upside above that $40,000 level. And wave 3 will obviously just be the middle wave. It won't be the shortest. It cannot be the shortest, which it isn't. It's already longer than wave 1. So for the most part, that would be how you'd have to play that move if you were to kind of look at it like that. Okay, so on the daily time frame, it's kind of still has that potential, a little bit more of a push upwards towards $40,000 before rallying on or collapsing on down. Obviously, fair value gaps, as we were talking about previously, 30,000 to 32,000, and I still suspect we're going to have a bit of a journey to the downside. This is, as I said, a corrective pattern, right? A 335. It's not impulsive, and that element of impulsion is very important for Elliott wave theory. You can like it, you can hate it, you can disagree with it. It's entirely up to you. Many different ways of analyzing the market, but under Elliott wave theory rules, this would be a non-trend. It would basically just be corrective, and we'd have to collapse down. So interesting to kind of see what happens next here for this one. Now we are in a bullish structure from Smart Money Concepts, as you can kind of see. That's good. That we spoke about that yesterday. That's not a problem. So we are going to be, in my opinion, finishing the 5th wave and then moving on down. Whether that is just going to be a retest of previous areas of support could be interesting, or whether or not we can keep above that $30,000 level. Now, when I start scaling this up to our weekly time frame, we do have a problem here with a rising wedge, so a contracting wedge here. Now, this particular pattern is not the strongest. This is going to be a potential bearish continuation pattern, something that I talk about all the time. I've often said the biggest bear trap in Bitcoin history. I still believe that this is a very big bull trap, because there isn't a lot of volume back in the price. Now, as I was talking about earlier with, where are those resistances coming in, there's some interesting points of view right around here. And I'm going to take this as a broad, no, I'm going to leave it right there, actually. Pull this across. It's not a coincidence that we've kind of got rejected here, right? So this particular area is 36,294 to 37,717, right? And as you can kind of see, if I expand this up, this area is where we're kind of finding this upper area of resistance at the moment. So this was a previous area of basic support that was lost, and we're now just retesting it. Now, of course, we can make this a little bit wider. We could bring this all the way down here, and we could say, well, we're just testing the upper area of it. We're going to rally on through it. Lots of different ways of looking at it. But if you just take the wicks out of the equation, which I don't like doing, we can kind of see here that this was where closed positions previously, right? So we were closing above $37,717, and well, at the moment we're still not being able to close. If we can get a close above that position there, that's going to put us in a really strong position for Bitcoin, right, on the daily time frame. So it's going to be interesting to see whether we can get through this area, close above this area of 37,717, because that's going to put us right back where we were in February of 2022. So it'd be interesting to see what happens here for Bitcoin on this one. But for the most part, I still look at this as a very bearish place to be for Bitcoin. We are looking at this as a very potential worrying pattern on BTC. So as we know, we have a W, X, Y, X, and Z. We were able to predict out the FTX crash based on the fact that we have fundamental differences between this bear market low point in June of 2022 versus that of previous bear market low points. And the Z wave pattern here specifically was going to have to kind of come down a little bit deeper, or we're going to have a new bear market low. We didn't know FTX at the time was going to be the catalyst for that. That was apparent a little bit later. But for the most part, we're able to kind of see that. Now, what we've got here as a potential concern is that we have an overlapping structure back upwards, and it's not a clear, pivot. So for example, here is your low from 2017, right, where we completely reverse out, and it's a very strong movement to the out of that bear market low point, which is very different to what you see here. This overlapping structure is very, very bearish. And so this particular pattern could be something really, really bad, where we have a W wave coming down here, which contains a WXYXZ. We move up into an X wave corrective pattern, again, probably just a WXYXZ, and then we move on down again. And so that's a huge concern. It's not that it's a guarantee, nothing ever is, but it is a concern that we should acknowledge. We can't just blindly ignore what's right there in front of us. So we want this to kind of be a good support levels to be found as a correction occurs, because I do think there's going to be a nice healthy correction. Okay, and I talk about healthy corrections and people don't want to acknowledge it. But let's just take a look over here, right? So we have the 2015 lows up into 2017, right? We take a look at these percentages, and I did this the other day. You can see quite comfortably that we have like 40% reductions, quite a lot of them, right? It's not just small percentage drops. These are pretty reasonable percentage drops for Bitcoin. It's a highly volatile market, right? And so we have 40, 38, 33, 40% movements, right? Now, in 2021, we didn't see this. There was a very easy bull market. We basically saw, so much money being printed. There wasn't really a lot of opportunity to kind of see, those kind of decreases. You can see here, there's 21%, 16%, and up here, you can see a 31%, right? These were very, very minor corrections whilst progressing upwards, and the moves to the upside were very, very quick. In comparison to where we were, this was more kind of slower, gradual. Pushing to the upside, right? So what are the differences? What are the major differences between these two areas? Well, you have this area over here, right? 2017 being an era where there wasn't just like a pandemic where stimulus checks were being printed and everyone was just kind of like FOMOing in with their stimulus checks or their furlough pay and basically just, seeing, prices rapidly move up. This was more gradual because people had to gradually put money into the market to take advantage of it. Back in 2021, there was so much money being printed, it was just being thrown in so rapidly that you saw a very, very rapid movement to the upside in terms of price. where are we going to be in this next market? Are we going to be in one that is going to be slow, or are we going to be in one that's going to be rapid? My money is on it being slower because there isn't as much money just being printed and thrown at retail investors to FOMO into it. So my expectations are that either this particular pattern that we see right here is in fact the reversal, okay, in the market, but is really choppy in terms of overlapping structures simply because there isn't a lot of money to go back into the market just yet. Alternatively, we have another move to the downside, and then we start to see, you know, a slower, kind of more rhythmic, I guess, movements to the upside, very similar to 2017. So it's going to be interesting to see how this plays out. One of the things that I'm pretty confident on is that we are likely to see a correction to the downside. Now, we're on a weekly time frame. That means it takes months to play out. This isn't something that's going to happen within just a 2-week or 3-week period. This is something that is going to happen over the next 3, 4, 5 months. Okay, it's going to take a long time to play out. But the idea here is that we go down and we retest the area of around $20,000. This would actually allow us to remove our overbought status on the monthly time frame and the weekly time frame. We're heavily overbought. Okay, so we are going to be looking for moves to the downside. We can't just keep going up. And unfortunately, a lot of retail investors are going to get wrecked on that journey. But for me, it's just something that's very natural. You know, I talk about a 40% reduction because, well, we haven't had a Fed pivot yet. And the Fed pivot will more than likely result in a 50% stock market correction, which potentially could have a correction to Bitcoin in correlation. So I think ultimately we're in right where we need to be. We're on track for this next move to the downside, and this next move to the downside is going to be the last opportunity, in my opinion, to buy many altcoins and Bitcoin included in that. I think though, for now we are where we are, and it's great to see Bitcoin progressing quite well. It's great to see the portfolio in so much green, but you know, we'll bear in mind that I'm expecting moves to the downside. You don't have to agree with me, that's fine. I'm not looking for approval. I'm literally just telling you my thoughts and opinions on what I think is going on here. So if you have found this useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, subscribe. But if you haven't yet joined us in Discord, want to go ahead and check it out, link is in the description down below. Until the next one though, guys, have a fantastic day.